Welcome back, brother. How are you, Ben? Hello, Ben Maldonado.
Now can you hear me, Dale?
Yeah, I thought you were playing Sounds of Silence by Simon and Garfunkel. So anyway, great to have you back, buddy. I know you always come here prepared, and I'm just going to let you go. Just one question: are you surprised at the resilience of stock indices continuing to, even if they're marginally making new highs, they are making new highs?
Absolutely. And I have to hand it to you. That was a good call you made the last time we spoke several months ago. You saw another high. I did not see another high coming, based on the cycles and the geometry and where we were. And we're poking through and making new highs. The question is, are we going to stretch out and actually make gains and, make some air over those previous highs? Or is it setting up for some kind of divergence and a false break?
Yeah,
and
that's what I'm thinking.
Yeah, and
Yeah,
I think the weight of the evidence is there, and we'll go over some stuff
okay.
in the presentation today that shows why it feels like, and you'll get this reference, the old cartoons. Remember Wile E. Coyote when he was chasing the roadrunner?
Ledge? Yeah.
When he goes over the ledge and his feet are still moving, he's still in the air and he's suspended and nothing's happening. And it feels like that's where we are in the markets right now.
Poor Wiley.
where we're making new highs and people are shouting about the breakouts and all that, and ultimately
they keep doing it by rotating. For months NASDAQ did nothing, which to me was a sign that what happened to leadership, and then they went to value, and in the last 3 weeks or so they've moved back to the growth tech behemoths, and that's how they keep the deal going. Plus, stronger oil has I think helped the market as well, one of the best performing sectors. But anyway, enough of me. Let's get going with your epic cycle.
Yeah, we're gonna run through our presentation and make a case for some intermarket relationships that seem to be pretty telling and may give us a little edge going forward here. In the beginning of the year, when I was on with you, Dale, we talked about 4 themes, and in one way or another, those themes have played out pretty well. The inflation stagflation theme continues to resonate, where we're seeing prices move higher, things are sluggish. They're giving you all kinds of reasons why it's not going to be sluggish for long, but we still keep seeing the sluggishness, whether it's supply chain issues or
employment numbers.
Employment, not being able to get people to start working again, businesses can't hire. I mean, it's there. The epic cycle, the main theme of the epic cycle is erosion of trust in old large institutions. That has been happening. We've seen the supply chain disruptions. Food security is now starting to come to the fore, and I think that's only going to intensify. What I wanted to do was also give people an idea of sort of the second half themes to look for this year, because I think they're important with the cycles that we've entered into in the last month or two. These sorts of themes are going to be playing out, and we're going to see them in different ways. You've spoken a little bit about this on your morning show. This inflation will be a theme in the second half, and it's going to be, I feel, very prominently represented with wage inflation, where people are going to, in their businesses, are going to have to pay more. Society is going to start asking for people to pay more. It's sort of this whole theme with a more equitable distribution of profits, right? Are people being paid enough? And this wage inflation, as you've said, it's not a transitory thing, because you're not gonna pay someone $20 an hour and then a few months later say, sorry, you're going back to 10 or you're going back to 15. It's not going to happen.
Right.
And the inflation situation is a similar setup to the 70s, where it was wage price inflation was a big driver of the inflation during that time frame. The other type of inflation that I don't know a lot of people are aware of or are looking for, but I'm seeing it, is what I call stealth inflation.
Oh yeah, the packaging.
Packaging. It was the other day I was looking at, we buy the same type of toilet paper because the family likes a certain type. So I got it and I looked at it. It was same price. And I said, oh, that's interesting. They haven't raised prices yet. Then I looked at, we had an old roll and I looked at a new roll, and the new roll was much smaller, not number of sheets in it, because that would be easy. It was less wide.
Oh.
And so they're putting less material in for the same price, giving you the perception that, oh, prices aren't going up, but you're paying more. You're paying the same amount for less, which is paying more.
Yeah.
So I think we're going to see more and more of this stealth inflation as the government tries to keep it, the perception down, and producers and people that are selling goods are trying to, prevent any backlash from rising prices. The next item is a big one that I think we got to watch, and I have an example of it already. The cycle that we've entered is subject to, it creates a background frequency where we are subject to sudden changes in the collective's perceptions. Now, what does that mean? Is that people's opinions of things are subject to rapid and quick changes. A perfect example of it is the whole lab leak theory. 6 months ago, if you brought it up, you were a nut job, you were a racist, you were all these sorts of things. Now it's accepted. It's accepted that it's a real possibility. We need to investigate it. We need to look into it. In terms of the markets, people's perceptions of where things are going or what things mean are going to be subject to rapid changes. So we have to be flexible. We got to really watch our levels, our technical levels. That's why, again, if the market keeps going higher, you can't stubbornly sit there and say, oh, well, I gotta, it's going to go down. It's the Wile E. Coyote thing. Yeah, that's all funny, but you got to really watch your levels. If we keep holding levels, then you got to go with it. You can't fight it. But watch for this sudden change. Watch for the volatility associated with that. And the other thing I think is the dollar. You guys have been talking about it. The dollar is the key, and I think it's going to be a wrecking ball, both up and down. And we're going to go over some reasons why. So those are the themes I think for the next 6 months we got to be aware of, because they should be fairly pervasive.
Is your cycle work and technical work leaning towards the low and the dollar is in after the Fed last week?
A low is in. I don't think the low.
low.
Yep. Okay. I think A low is in, and we'll go over that. I'll actually show you the path that we're looking for there. For those that haven't heard the talk before, I'll quickly review what the Epoch cycle is. It's a 400-year cycle where we're coming to the very end of it. We're in the last 5-6 years of it. This cycle was the characteristics of it are development of large centralized institutions that society depends on to provide services, organization, support, structure. We're in the fragmentation phase. We are in a time of massive changes because the old system and these old institutions are going away and they're being replaced by new ones. Couple examples, this is the rise of Bitcoin. The cycle supports Bitcoin, right? Get away with central control of money, decentralize it. The Wall Street bets is another example. It's a decentralized hedge fund, right? It's a bunch of individuals who are acting collectively, creating like a hedge fund. And it's another example of this sort of thing coming. And I think, I know a lot of times, Dale, you talk about this great reset, and what is that great reset?
Yeah, I don't really even know what it is. I think people talk about it being like the end of the dollar being the reserve currency as part of it, right?
Right. I don't know whether the dollar is going to do that. And based on what the cycle work and the technical analysis I've done on the dollar, it's not happening right now. I'll tell you that.
Yeah.
But this Epoch cycle is the real Great Reset. That's what the Great Reset is. It's not, you know, 4 or 5 guys sitting in a room in Geneva, you know, figuring out what the world's going to be like. It's this massive change in what the background weather or the background frequency is going to support, and how we're going to transition, you know, from this centralized world to a decentralized world.
Okay.
Here's some examples of what happens in the epoch cycle, where these failing, large, powerful, centralized institutions. We've gone over a bunch of these. I added a few recently for this presentation. Big tech is one. Years ago, big tech was supposedly the greatest thing. People loved it. Couldn't get enough of Google and Facebook and Apple and all these companies that have these monopolies. So to, you know, without calling them monopolies, they're monopolies. The tide's turning on that.
Yeah, you mean with the regulatory proposals in Congress?
Not only from a regulatory standpoint, but a sentiment standpoint.
You mean people aren't using Facebook as much, not as much engagement? Or
well, they're using it, but they're not happy with it, right?
Oh,
they want an alternative. They feel like, you know, they have too much power. There's too much control. There's too much manipulation going on. So I think big tech is in the crosshairs now. With the recent revelations from the emails, you'd have to say science and scientists now are being questioned, right? Are they really using science, or is it agenda driven? And it doesn't have to be, it doesn't matter where you fall on that debate. The fact that the debate is becoming something is a sign of this cycle, right?
That's why you didn't get vaccinated, correct, Ben?
It's part of it is that, as well as which I'll show you with the connection with the 70s, is we're in that same cycle. And in the 70s, there were major issues with a program.
Swine flu.
That's right. They were trying to vaccinate the whole country, and they had major issues.
Yeah.
So let's go to a little smaller cycle. We go from 400 years back to about 50 years. We look at the 70s. We've talked about this on previous presentations, but I wanted to just show this slide. We had Nixon, who was connected with Trump, and there's all the reasons why they're connected, which we've reviewed. I put this slide in. Is Joe Biden basically Jimmy Carter? Do we have Jimmy Biden? And let's look at some of the connections here.
What swingers they look like in there.
They look very happy, didn't they?
Let's see that again.
You want that one again? All right.
Come on, one more time.
They look pretty happy.
Yeah. Jimmy's going, hey, I like younger chicks. All right, go ahead. I'm sorry. I'm being very controversial today. Go ahead.
Right. So the connections between Jimmy Carter and Joe Biden, I think, are fantastic, right? They're both both Democrats coming after an unpopular Republican president. Both of them dealing with stagflation issues. Both of them have vaccine issues. Women's and gay rights were prominent during the Carter administration. They certainly are to the forefront now with Biden. We saw gas lines in the 70s. We've got gas lines now on the East Coast. We had that a month or so ago when that Colonial Pipeline got hacked. There was a war in the Middle East. You have the Israeli-Palestinian conflict going on now. A few more that I put here that have not happened yet, and I don't think I could give us a check mark yet, but could be coming. If you remember, New York City was on the verge of bankruptcy in the mid-70s. It may happen again. If it wasn't for the federal bailout, it probably would have happened this year, but it may happen again. The first Earth Day occurred in the 70s. The Green New Deal is, being pushed in Congress by a large number of members of Congress, and it may be a reality. It may come to fruition. This last one is one I find really, really fascinating, is that Jimmy Carter boycotted the Moscow Olympics, the Summer Games in 1980. He did it because of Russia invading Afghanistan. I've heard talk now that this is not set in stone, and he probably won't do it. But just the fact that they're talking about potentially having the U.S. boycott the Beijing Olympics next year the Winter Olympics next year in Beijing, and having us boycott that. It's again, it's fascinating to me that these two guys 50 years apart are pursuing potentially similar paths.
Okay, that's an interesting one.
Yeah.
Where did Russian invade? Was that Afghanistan?
Afghanistan.
That's
Yep.
right.
That was Afghanistan.
1979. Yeah.
That's right.
Okay. All right.
This presentation is going to be a lot about the dollar because everything that we've seen since the COVID crisis, I think has keyed off of the dollar. And I'll show you some of the relationships when we get into the slides. So right now it's king dollar, right? The dollar is king. It is the global reserve currency. And I believe in the markets, it's all about the dollar right now. The consensus since the COVID crisis hit is that because of the actions of the Fed and our government spending all this money, that the dollar is doomed. It's going to no longer be the reserve currency. It's going down and going down hard. And everybody was positioned that way and continues to mostly be positioned short the dollar. The question I was asking myself as I was looking into this and researching it is, what if the dollar says, no, that's not happening. We're not going to do that. We're not going to crash. We're not going to collapse. We're not going to give up reserve status right away. And that's what this presentation is going to be about and showing that. First, let's go into the relationships. Since last year, since January 1 of 20, there's the two charts, the DXY and the SPX. And you can see the correlation. As the dollar went up here, the S&P crashed. When the dollar started going down, the S&P started going up. And the rate of descent has slowed, and we'll talk about this, but the relationship is still there. When the dollar is strong, the market's weak. When the dollar's weak, the market's strong. How long this correlation will hold, nobody knows, but right now it's pretty evident. Same thing with NASDAQ. There you see the NDX and the DXY.
Yep.
And here's the Goldman Sachs commodity index and the dollar, right? Yep. Same type of relationship. Strong dollar, weak commodities, weak dollar, strong commodities. Well, if everybody thought that the dollar was going to be weak because of the QE, because of money printing, because of the spending by our governments, where can we go? What can we look at to see, is there a precedent for this? Do we have any benchmarks to look at? Well, in Japan, they've been doing QE for 20 years. So I went back and I looked at the Japanese yen futures on a monthly basis. The Japanese started QE in 2001. It's been 20 years. And the yen, while being volatile, has essentially gone nowhere. It hasn't crashed. It hasn't cratered. Now, the purists are going to say, well, you can't compare the Japanese economy to the US economy because we're very different. I'll give them that. I'm only looking at, did it dramatically affect their currency? And the answer is no. So maybe, does it mean that it's not going to dramatically affect the US dollar? No. But maybe it means that it's not automatically going to crash the US dollar. So there may be an opportunity here if the market thinks, hey, the dollar's going to crash and the dollar's going down, and maybe it isn't for that reason. Here's the DXY on a monthly basis. What I really homed in on was, if you look at the last time the dollar had a big move down was in the after the .com crash, right?
Yeah.
Then we did QE at the Great Recession, right? After 2008, 2009. Here's that decline right in here. But look at the dollar since then. And I would hardly say we've had tight monetary policy or had a government that was spending within its means. They've been spending like drunken sailors for 10 years. And look at the dollar, higher lows, low,
Yeah.
higher low, higher low, another higher low. The speculative path I have for the dollar right now is we're going to see a rally, a strong rally, which you guys have been saying, it looks like this little corrective move has stopped, and the next rally is going to start. I think we can get up. Go ahead.
95, 96.
Yep, 95.70 resistance area. I think we can rally into that. Then I think I don't know what's going to happen. I don't know what the event is going to be, but the path and the cycles for the dollar are showing another strong move down in the dollar after this next high. And so I imagine that there's some sort of exogenous event where we're going to have more QE, more government spending, and the dollar is going to take a big hit down to this support level in the 85.50 to 87.50 area. And then again, I don't know what the event's going to be. I don't know what's going to happen, but the cycles are calling for a massive dollar rally. And the different levels, these three arrows represent different possible levels for a potential price on the move: 104, 112, or 120. Now, I know people know that I've been very bullish on commodities. And if I'm sitting there listening to me talk and someone says, well, we're going to see a massive rally in the dollar, how in the hell can you be bullish on commodities? Aren't commodities going to get killed if the dollar's strong? Well, and that's what's been troubling me about this, right? And I've stepped back and I looked at it and I said, well, let's look at history. Let's look at the similar cycles that we're experiencing now. What happened then? Do we have an example where it could make sense that commodities and the dollar could go up? So I went back and looked at the 70s. Here's the DXY from 1978 to 1980, essentially. Big move up in the dollar. Right?
That was Volcker. That was Fed tightening.
Well,
and you're right. And commodities were going up. Grains were very strong into that. I remember corn, and the Fed, didn't like what was happening to grain prices. Actually, higher rates did break the corn, but corn was really the kind of star of the show back then.
Well, here we're going to go over a bunch of different charts from that time period and see them. Here's what happened to 30-year yields.
Yes.
So yields went up dramatically.
Yeah.
Gold, with a strong dollar, gold went to all-time highs at the time.
Yeah.
Strong gold. Silver, same thing. Crude oil, same thing.
Yeah. So it takes a while, even though you have dollar strength, for it to have impact.
Right. Copper, same thing.
And look at those prices compared to today. Yeah.
Yeah. Look at wheat. There's what you were talking about, the grains. I mean, I could have showed a ton of charts. I tried to show some in each sector so you see what happened and get a flavor for what these commodities did. Look at sugar.
Yeah, I remember.
So, I mean, the dollar, there is precedent for the dollar and commodities both rising sharply, along with interest rates. And I think that's what's coming. I think that's what's coming. Inflation and stagflation is here. Both of them are here. How do you protect yourself? How do you do well? You buy real assets. I've talked about this. So let's look at a few. I don't have a million charts to go over. I'm only going to show you a few this time.
It's okay. We only have 5 minutes left anyway.
Exactly. So here's the SPX. I say one more time because I believe this is the one of the last few times where we're going to get some sort of Fed intervention and the markets are going to respond positively. So this move here into July, August, I think is this next move up in the dollar. So the dollar is going to go up. We're going to get a correction here. It could start today. It could start tomorrow. It could start next week. It could start next month. I believe it's starting any minute now. We're going to get this move down. And then whatever that event is that creates this next Fed intervention, this is the terminal blow off high. I mean, I think we see 4,850, 4,900, 5,000 on the S&P by next January, February. First move down is to 3,750, 3,800 by my work using geometry. And then we blast off one more time into the terminal highs next year.
Okay.
Couple charts I wanted to highlight that I think look especially attractive.
Starting to percolate.
Yeah. So here's natural gas, right? And Dale, you recognize this formation because in our previous talks, I've shown how there's a tremendous base in all these commodities. Once they break out, then we get the big move. Gas is just now breaking out. We've got a 12-year base, and we're just breaking out of this major downtrend line from the 2011, 2010 highs. I think gas has a big run in it. Targets
14 maybe, huh? 14,
14's possible. I think in the short run, I think once it gets going, $7 and then $10.
Okay.
So gas.
Ronit's saying 1720.
That would be a hell of a move. I think it's possible. Yeah. I mean, listen, if we're in a super cycle on these commodities, they should all take out these old highs, right? They should take out those highs. And 1720 would be right up here at my resistance level, on the top of the square. So it's possible. I just like the risk reward. I like the setup on natural gas. Here's another one that's already broken out, sugar.
Yeah.
But it's got, it hasn't made the move like the grains and other things have, which are correcting. I'm still bullish long term, but they're correcting. But here's sugar. Sugar's another one that, is basing in this 16, 17 range for the next move higher. And so those are the two I wanted to highlight. And the summation is it's all about the dollar. And if we see dollar strength, you're going to see weakness in the market. And when you see that dollar go up in this next big move up, don't be afraid, because I think the commodity history shows and the cycles support that the commodities can go right with it.
One thing you don't cover, and just a quick comment on crypto.
Mm-hmm.
What do you think?
I'll show you a chart. There's Bitcoin.
Okay.
So Bitcoin, we talked about this. You and I talked about this when it was at 60,000. I said, we're really vulnerable here if we cannot get above this resistance. Right now, crypto is in this bearish consolidation, in my opinion. And it's basically been screwing with everybody on both sides of this triangle. It broke out here. Everyone got excited because we were below this resistance. I said, forget it. I'm not interested until we get above that and settle above it. Now we broke down on the bottom of the triangle, screwed with everybody there that started getting bearish, and now we're back in it. I think the weight of the evidence is lower. I think the prices I'm looking for here, this is around 23. And if 23 doesn't hold, the next stop is 15.
Okay. Scott Henderson is asking, and we'll wrap it with this question. So what would be your tell for that US dollar breakout?
For the US dollar?
Yeah. What would be your tell? Is there a level or something that would tell you it's happening?
95.70 is the level.
Is a breakout.
That's the massive breakout. We get above and settle above that.
Okay, then we're going to 100.
Then it's 104, 112, 120.
Okay. Yeah. But right now you're thinking it's just going to be a bear market rally to 95.70.
That's right. I think we rally into that area and then we go down and make lower lows. I mean, you know how the boys that control the market love to do false breaks. I think that's what they're going to do. They're going to take it down, clean out all the stops, get everybody bearish on the dollar, and then they're going to launch the massive move in it.
And what do you think they'll take it beneath 88 when they do that? Recent low 89.20.
I mean,
some people are looking for 85.
Yeah, I got support in like the 85.50 to 86 area. So do they go down and clip that? Maybe.
Yeah. Okay.
Yeah.
Great interview, buddy.
Appreciate it, Dale.
Yeah, it's good to, reinforce what's going on, and your epic cycle is epic, EPIC. So thanks, buddy. Good hunting, and I'll catch you down the road. We'll set up
Yeah.
another one. Okay, bro.
All the best to you, Dale.
Okay, so that's a wrap. Everyone, thank Ben for sharing it. Sinatra's thanking you, Monica. Ronit likes it because your views are similar on things like natural gas and the dollar, and how people like agreement. So you're a genius if you agree with people, right? Huh? Is that it, Ronit? He's a genius. He must be, because he's seen what you are. Okay. All right, everyone. You have a great day trading. See you. Remember, don't just count your epic cycles, count your blessings, and be grateful during this cycle for any little thing you could find. And that's going to be a wrap. You're welcome, Scott, and we'll see everyone to wrap the week. Thanks again, Ben, very much for sharing your views.
Take care, Dale.
All right, buddy.
See ya.
And guys, you could join the team for the morning edge in 13 minutes. So get over there. Adios.